Hello, welcome back to another ES Futures Trading Stream. Today is Friday, December 8th. It is 9:15 a.m. Non-farm payrolls release happened about 45 minutes ago. We have a reaction to this number. We have a spike to the downside. Inventory is, I would say, 100% short. It got very short with this spike to the downside. Notice the histogram, the higher volume, um, the higher volume on this period is actually in the upper side, below 87, below last. Is that last? Yes, it last, right? Just below last. You have this area of volume for today. Oh boy, this is huge, man. 40,000. Medium is 40,000. Wow. Look at this. This is 36. Oh boy. Oh gosh, I didn't notice this. Look at the volume we have here. 80,000. 80,000. I didn't. This is. Oh. Gosh, there's a lot of volume here. This area, this balance has tremendous amount of volume on it. Tremendous amount of volume. I'm going to remove this. This one remains. I guess, this is very. Okay, I am starting from the end, but just this is something that this caught my attention here. Yeah, okay. By itself means nothing, but notice how this is actually inside. It's the center of this 3-day balance here. Now if you put all them together, this area has tremendous amount of volume here. If the market goes higher or lower, whatever direction it goes, the resolution can be very dynamic here. Now, yesterday we have an inside day. This is balance, right? 3-day balance inside a 10-day balance, and yesterday was an inside day to the upside. Okay, and also really good amount of volume here. The same kind of volume you have here is the same volume we have up here. Just impressive. It's moving higher here. Now, what this market was doing, I hope you have noticed that. Something that I have noticed that this market is doing is, it doesn't have anything strong enough to break or to rally. Every gap, every rally market has had out of this range has been retraced, and after every break you have a rally as well. This market pretty much trading in this range, between this high and this low here, or this POC. I would say this POC, between this POC here and around this, we could call, what is this, 85, something like that. Okay, let's call it this low here. Okay, let's call it, I'm going to call this level. This is going to be my reference today, this level here, because this high here was used to buy multiple times here, and this high is pretty much, you know, face was made from this, right? And now the activity is coming from this area basically. Okay, notice I don't know what the heck is this gray line, but it is something. That's what you do your homework. That's what we do homework. The homework is very important. You know, we got a monthly, weekly, and daily time frames here. Yeah. Notice what's happening in the monthly. We have a trend. Finally, we have a trend here to the upside, and I just couldn't resist the temptation to draw a trend line here. You know, it just goes through so many lows here. I just can't avoid wonder, right? What can happen here, right? There's no excess here, in this upper side, right? We have 1, 2, 3, 4 highs that have in this range. Now it's a range, right? Now it's a range. We have a kind of like a trend that has started, and this is a trend line here. The market can come down here, check this trend, and go high again. The difference now is that this 4500 here is very important because it has a lot of movement in the intraday. It's not any regular century number here. We see, because when we check the weekly time frame, this is the trend line. Notice what is happening here now. Did you see that? Again, a trend line. Notice how many times this market was being bought exactly from this trend line. You know? If I can see this, everybody can see it. And now again, no, okay, now I see the trend line. Oh, okay, I figured out the market, right? Now I know how to trade. I'm going to buy from that trend line. Usually this is how one identifies the later stage. This could be the later stage of this movement. It can be. I'm not saying it is. No, there's good odds that this market can easily trace it here. Not because this also is a potential firecracker effect. In the weekly time frame. In the weekly, we start to see that this 4500 has been traded multiple times here. Right? Just that, not much here, right? But it's important in the same way how this level, for example, was traded multiple times here. Right? Recheck or retest, comes back into this range here, below this, and then after that, upside movement. I can see, or we can see this just after the fact. After the fact, everything is clear, right? But you have to, try to be in sync with the market when it is happening. That's what we traders aim to do. No, market is going to open soon, pretty soon. Now, I have about 5 minutes to recap. Now we have a range. You have a 10-day range here. 1, 2, 3 days. This is not an outside day. Notice what's happening here. Right? What happened yesterday? Remember this. How many times the market was bought from what came to be PMC, right? POC. I can see the same thing going on here. Something similar. It's not the same, right? Market goes higher, comes back to this area. Yeah. The difference is that this market is not having this formation, okay? Every time you're getting lower and lower and lower, right? Which was the difference, which was the key from yesterday. This is extremely weak level. Being long has extremely high risk being long here. High risk. The loans are very risky here. Market tries to go higher, comes back. Tries to go higher, comes back to POC. Tries to go higher. And each time it tries to go higher, they got less and less. This is how the market gets too low. Now, this inventory has not been, some of it has been repaired, but I won't consider repair until it happens during the regular trading hours. This is the overnight. We have a spike to the downside. Before we go over there, the same kind of formation, something similar can be happening here, right? Once this contract is over, notice once this contract is over, the market right now, this 4600, right now the market is 4683. Okay, in March contract is 40 points. There's 50 points of difference here. That this fight that is happening around, the stock war that's happening, that's going around the 4600. Once this contract is over, which is next week, the market will be just automatically way up here, way above this level here. So this level will be correct. The market will open up here. By doing nothing, just going from one day to another, that will be it, right? And that will give access to this market. I'm just imagining something there, okay? Now, into the current session, just a couple minutes before the opening, you got this. Just imagine what's happening to these longs here, right? They haven't closed. If they haven't closed, they haven't closed now. I can see there's tremendous amount of buying here around the 86 again. What's 86? Around this, right? Right? What's happening with this inventory? What's happening with this inventory? It's getting weak, right? They are underwater now. They are underwater. If the market opens down here, it still opens inside previous day range with this advertisement for chop here. Chop and rotation. I can see some profits taking here, in this period. Or maybe closing, who knows. This high is weak, it's exactly from POC, and this is very close to this high here, which weakens this high even more. Now, prominent overnight POC and all the activity of this market, every time the market rally, it just came back inside this inside day here. This breakout was extremely weak. It's extremely weak. It seems like this market is holding until the end of the year or end of this contract. I don't know which one it's going to be before any break, any direction and move. Until I see, wait a minute, let me, I got only 30 more seconds. Let me find my, there could be some opportunities today. The first thing I am thinking, okay, let me update this. My focus is this low here and the spike, okay? My focus is the spike to the downside. The market opening inside the spike is as neutral as it can be, because the market is not rejecting nor accepting lower prices. Let's see if this market can single print this way out of this inside there. I am as neutral as I can be because the spike is being rejected actually. Okay, the spike is, what is the spike? This would be the spike here, from here below, right? And the market opened above the spike. This is the rejection of these lower prices. And now, but the situation we have is from yesterday, we have this, I don't know what the heck is this low. Do you have this level here, right? Just there's tremendous amount of stops here. All these longs now are underwater, right? What happened? Just imagine what happened. My market was way down here. What can happen with this long inventory? Okay, the market's coming back to me. Gosh, I am going to close flat, right? That could be something. That selling can come from this area. Remember, above this area, I'm going to call it this. There is tremendous amount of buying here. I'm going to put green here. Okay, because above this area, notice where it has been sold. Right from that low, right from the base of this inventory that is very long from yesterday. Inside there's a lot of chop inside these days here. Opening inside previous day range is an advertisement for chop. This high is not good, this low is not good, coming from overnight high, but just notice between these two areas here. There's a lot of chop here. I will open. What I will do, I got too much things here. I don't like this stuff. I want to open this profile and see it. Right? What happened in the overnight? The inventory is very short here. We have an action to the upside here in the overnight. Inventory is very short. So the counter action to overnight inventory is a rally. But we have this situation here. This high is weak here. Traders have a tendency, to become very emotional. That's why market going lower here. Oh, okay, I'm going to go short. I have to be short. I don't want to miss the trade here. I'm not gonna miss it. Low volume. Now, notice this area, okay? Market's getting inside this area of volume. What the market does here is going to dry here. If it dries, it could be a short here. It can also come all the way up to here. if this inventory is taking, you know, when the shorts from this area are taking, the market can actually squeeze the shorts there. What do you do? What do I do? Don't know. I don't know what's going to happen. Opening inside previous day range is an advertisement for chop. The closer to the center, the higher the odds of chop and rotation. Oh, I know what this level is. This level was the high of this distribution. That's irrelevant now. Selling is coming from this area here. These shorts are trapped now. I mean, the longs are trapped here in this situation. You have longs here, but have, you can average. You can average. It seems like that's what's happened, right? Trying to get into the mind of traders here is because the dominant force right now is what the trading has been conducted by short-time traders here. That's what's going on. I think that is going to be the case for this. I mean, for the remainder of the day and for the next week as well. Now, if you have a market that's going lower here, you have supply here to sell into this, right? Traders see the market breaking here. There is a big spike to the downside. What do you think they are thinking now? This market is going lower, right? But in fact, the market just has opened where it closed yesterday. Right there. All this inventory is being rebalanced here. It's removing the longs here. These longs are being removed here. The ones that were not closed here, the stops that were not hit down here, they're being removed now. And that actually strengthens the market. Market generated information on top of emotions, trying to giving more weight to market generated information rather than to emotions is key in this business. Is the key. It's very important. We had the same kind of opening as yesterday. About the same. Opening inside previous day range. This time even closer to. Oh no, yesterday. What happened yesterday? No, yesterday we opened with a gap, right? We opened with a gap. And the gap was closed right away. No, my bad. No, yesterday we opening very close to the center of the range. And now, again, close to the center of the range. This is an advertisement for the show. This level was weak coming exactly from POC and very close to the 4600. And yesterday this was very close to this weak level. This high make this high even weaker. So this area is very weak here. Now let's see now what the market does. It continues to do this. Try. It's pushing hard to get to this number here, to get to the 4600. Okay. Now this inventory here, market got too long, now has been dealt with. I don't like this very close to hard back here. Let's see now if it can take M high. M high is questionable. Very close to L. From yesterday. This is from yesterday. This trade, this spike is over. This trade, this spike to the downside was taking this inventory out. It's over. It's over. That was it here. Market opening up here is rejection of the spike actually. And now we can see this clearly rejecting these lower prices here. This high has been taken. So there's another attempt now. There's another attempt to take this towards the 4600. Now, a market, check this out. A market single printing its way out of previous day range is actually a sign of strength. Okay, we are 15 minutes into the first period, kind of like about the same volume as yesterday. But I am starting to wonder now, is this market going to single print its way out of yesterday's range now. Okay? Just imagine what happened to this inventory here. How they feel now. Boy, this is good. The market came to my rescue. Lower prices are being rejected. Higher prices are not being accepted too. This has been corrected. Now, where is A? Technically good here. Next thing, what the market is doing? It's going higher, lower. I don't see market doing anything yet. You know, this can be a counteraction to this overnight short inventory. Notice how most of the inventory is below zero, which is short. Yesterday we have the same situation. You know, 60-70% of the time there is a counteraction to overnight inventory, which means the 60-70% of the times the overnight session are wrong, or is wrong. The traders from the overnight session are wrong. That's what it means. Okay, I want to see the market sink, as I say, is the market gets out of this range, yesterday range. Last and I would say maybe POC is the base of this market getting too low. Okay, this was a short term. This was a typical trade. But that trade is over. That trade is over. The accumulation of that inventory, the rebalancing of that inventory has already happened. That's over. Now, is the market going to get long again? Is the market going to get short again? Oh, don't know. Are we going to have a trend day, a trending day? Notice where value is. It is just one period. We have inside value. But it's just one period, man. It's just a fixed period. This area of volume has been taken. Okay, from yesterday. This has been taken. We have another one. So this has been dealt with. Come on. This has been dealt with. This one from yesterday. Okay. There's another cluster here, just above this one. Just can you see what can happen here? Taking this cluster out, the market can go without volume here, but to go higher, the market will need volume actually. Can you imagine the traders? What the traders are? Traders are very emotional now. Boy, this was a big break to the downside, and that break was rejected. So this is a strong market. Let's buy it, right? That's a mentality. I'm not saying that's wrong. So understanding that, we can take advantage of that actually. That high is being checked again. That high is not good. Notice where that high is. Overnight high, right? Overnight high. Very mechanical high. Continuation, we have yesterday's high. Then you have Wednesday. Then we have Friday's POC. Then we have 4600, and then Friday's high. We have a small trend here. We have a range, and this is value is higher. Yesterday we had overlapping to high. Still an inside day. 20 minutes into the first period. Everything is setting to break yesterday's high. This is a setup for yesterday's. It's a setup to take yesterday's high. It's hard to believe, right, that after this movement to the downside that we have, this significant spike we have today. It's hard to believe that that the odds are for rotation here. Chop and rotation. Just a couple minutes. Less than 5 minutes for the next period. We have a pullback to half back. The pullback is to this level. Last, remember what do we have last here from yesterday? The same area is being bought again. High is questionable, low is questionable. Are we going to have a day? Yesterday there was a lot of buying around POC, right? Which is a 45-degree line there, what we have. Now, can we have today a 45, but this time to the downside? If that happens, it could be a rally at the closing. The key is to be patient. You have a lot of patience. This market is very choppy. We have a balance. Okay, the market is in balance. 10-day balance. Now, inside that 10-day balance, we have a 4-day balance. Just consider the 10-day balance. You have this really nice balance here. Inside value, overlapping value. We have a little bit higher now. We're going to have lower volume today. Crude is forming a range here. Rally. Dollar. Gold is falling. Okay, look at what happened with gold. Gold has closed the gap. Has it? High 1750. Low 1850. Oh, one tick from closing the gap. God. Wow. Look at that. Do you see that? All right. Gosh. It opened and then boom. What do we have today? Do we have any numbers here? Oh, consumer sentiment preliminary. Yeah, consumer sentiment. What is the consumer sentiment here? Probably it's a good number, right? Look at the high, 4,600. Consumer sentiment 69, forecast 62. Wow. I mean, you don't need to see the number. You can kind of like gauge the number. You can kind of like guess the number for the, checking the reaction of the market. And notice where this buying came from. POC, right? Finally, they are hiding it now. Look at the high, 4,600. Market generating information, okay? A spike being rejected. This high is not good, this low is not good. Spike based on news. The market, what the market is doing now. Let's see, can the market come back inside this range? It's buying from this high, selling from 4,600. Very mechanical trade here. Now that this has happened, I can say, okay, I knew I was going to rally, right? But that's just a number. This number here, consumer sentiment. Friday, where's Friday? Consumer sentiment. Actual. Friday. What the heck? Friday 8. Where's consumer sentiment? 10. Consumer sentiment 66. It was 56, consensus 57. Look at this. Huh? It's a big difference between the forecast and the actual number. This could have been very well, in the same way as it was almost 10 points higher, it could have been 10 points lower, right? And we would have the opposite reaction here. We don't know what's going to happen. That's the thing. We don't know. Volume is very low here. Today, if this continues, today we will have even lower. We may have even lower than yesterday. Notice how mechanical this trade is, right? Selling from 4,600 have good odds. Now this market has good odds to keep going higher. This high has been repaired. This high has been repaired. This one also, remember, we were talking that this was a weak level, and yesterday's make this level even weaker. Alright, that one has been checked. Now we have this excess here, this little tiny excess here. Okay, and if I remember well, we got also some the inventory here is there was some overnight here. Okay, this inventory was deal during this day. Not just 1 day or 2 days after the pretty much here. Now don't forget about this not revisited a very prominent POC here. This overnight has been dealt with. mechanical selling. We have a breakout of range. Breakout of balance. This is a breakout of balance. This is a breakout of this inside bar. We have yesterday we have an inside bar to the upside. Now we are having a breakout. Is this going to be a trend day? Who knows? Odds are to the upside. Odds favor the upside here. Selling coming from this is it's not that convincing. No, the market has come back inside this range. There's still supply here to take this market higher. It doesn't. This inventory actually was long here. This market was getting too long here. Got liquidated. Huh. I don't like this kind of profile here, this kind of histograms here. Always attract markets, man. I don't like this one. If the market comes back to this area, not today, I'm not saying it's going to come back today, right? Or if ever it's going to come back, but when the market comes back through these areas, usually it's the way it does is it just does it really fast because there's nothing here holding. There's nothing here holding the market. Alright, 4600 has been taken. Woohoo! Hooray! Alright. $46.33 is the next reference on the upper side. Oh, this buying coming from this just 3 weeks, right? 3 weeks coming from the trend line here. The main reference is you have 46.10 here and 33 basically. The market again is out of this range, outside this range. Wow, man. Look at that. Do you have a long here? Anyone? This market is having upside continuation. Now volume needs to show up here. Alright. Volume. The cluster of volume has been just taken out. There can be some squeeze here. these shots here, these shots are being squeezed. These shots here, just can you imagine? You just imagine the emotions of these shots here. First, lower prices are being rejected. Now, if you have not closed here, just man, this is painful to watch here. It's painful to watch. This is squeeze. This is a gigantic short squeeze here. There's a breakout. Okay, there's a breakout of this range here. Breakout of the inside bar. Go with the breakout, preferable in the direction of the inside. Okay, just a second. I need to take this call. Hello?
Loito.